Moving on to the cattle markets now, and the latest Cattle on Feed report released late last month showed feedlot placements over 9% higher than during the same time last year. The reported number of cattle on feed for September 1st was 11.4 million. That's almost 4% above a year ago and the largest September 1st total since the series began in 1996. Mike Briggs over at Briggs Feed Yard joined me this week to run through the numbers and talk about what he's watching in the cattle markets.
Well, it was interesting. That was kind of a bearish cattle on feed report, but the market just completely shrugged it off. It opened a little bit lower on Monday like they thought, but it didn't go quite down as much as they had thought, and it just ground itself higher, so the market pretty much shrugged it off. Now, the things I would pull from that, of course, the marketing number was a little bit short, but there also was one less marketing day, so our marketing was actually pretty good. The placement thing, there's a lot of bits and pieces to that. You're starting to see a growing drought in the west, and it's growing towards us. It's been very dry here, so you're going to see a lot more cattle come to feed yards earlier than they typically would have, and you can kind of see that in the placement weight data. So yeah, there's a lot of cattle on feed right now, so guys got to be really careful here because it looks like we're starting our fall rally, and I think it's going to give guys opportunities to lock in some profits. I think that would be a really smart thing to do because that report showed us that we're never going to get away from cattle. We're not going to run out of cattle anytime soon.
So what does that say to you about the beef industry and the beef producer as a whole, that even with COVID, even with packing closures, even with other market disruptions, things are still just chugging along?
That's a great question. You've got a little thing going on in the cattle industry right now. You've had some bigger feed yards get even bigger yet. So they have a lot of bunk space they need to cover to make that thing turn. And so I think you're seeing people buying cattle just so they can receive the yardage. And that's a problem because that means they're going to buy them with no margin left in them. Now, having said that, we had opportunity to buy cattle with margin through July and part of August. So that was the reason for a lot of placements also. It was just interesting that as many cattle were available as were, but part of that's this growing drought, I believe. But you've seen a lot of it, and if you look at the numbers, Kansas is stuffed full of cattle. You've seen a massive build on in Kansas, and there's been a massive flood of cattle into Kansas, and that's because of the bad winters we've had the previous 3 years, and so people are afraid of the winters up here in the north. Hopefully this year, because of the drought, we're going to at least have a dry winter, and so it won't affect our performance quite so much.
And I want to get a word in about boxed beef. So take me through what you're seeing with boxed beef. On one end, you've got retail demand. On the other end, of course, you've got restaurant demand. And, we've lost a lot of that restaurant trade due to COVID, but it seems like retail trade is still looking pretty good. So how big of a shift is that from what we'd normally see this time of year?
That's a really good question. Most of your meat always moves through retail, but yeah, there's a large percentage, or there was a growing percentage that went through food service, which has dramatically shrunk, and you're seeing more and more of it go back to the retail case where people are buying and eating at home, and until we can get control of COVID, it's going to continue to be that way. The great thing I read the other day on a report about all this was 61% of the purchasing dollars went towards beef. So people are gravitating towards beef, even though pork is almost free and chicken is fairly cheap. People are buying a lot of beef. So it's been a great deal for us from that standpoint. Obviously, COVID is not good for anybody, but the fact that the consumer is going back to beef, relearning how to prepare beef in the home, I think is long-term fantastic. Boxed beef, now typically what you have this time of year is you rally into Labor Day, and then this thing just can't hardly get to the bottom fast enough to rebuild demand because Labor Day is your last big beef holiday. But this year, we just took a couple of steps back, and then it's right back at it. A lot of that is due to exports. Exports are really good right now. That's because of the lower dollar and because of the trade agreements that we've made. And so exports and domestic demand is really, really good right now, and that's a great thing for us.
Yeah, and harvest is moving along well too. Anything you're watching in the corn market?
You know, this corn market got out of hand really fast when the Chinese started to buy corn, but I think that's more of a short-term deal. There's still going to be a lot of corn out here. I think when we really get into gut slaughter harvest, we're going to back this corn off even more than what we already have. The idea of having sub $3 corn, though, I believe that's gone, but I still think there's 30 or 40 cents down in the corn yet, because we still have a 2+ billion bushel carryout, and that's a lot of corn. So we can't get it too high because we've got to keep demand stimulated to use that. Ethanol margins are poor, so still the biggest plant in Nebraska has remained closed for several months, and I've heard nothing about the ADM plant in Columbus opening up. So if you don't see good ethanol margins so that there's demand from the ethanol companies, I think that's going to be a problem.